Hey guys, I'm going to walk you through how to do a skewed strangle and how to set one of these up in Interactive Brokers. So, what is a skewed strangle? Well, a traditional strangle is selling an out the money put and an out the money call at the same time. And you generally set these up with the same deltas on either side. So, you've got a 20 delta strangle on the call and a 20 delta on the put. That gives you a delta of zero, which basically means you are delta neutral on the position. A skewed strangle is basically where you have different deltas on either side, where you're skewing it if you're slightly bullish, or you can skew it that you're slightly bearish. So we've got IWM up here in the options chain, and I like to sell options 45 to 60 days out and pick the nearest monthly cycle. So the nearest monthly cycle with 49 days to go is January the 9th. And you can see here IWM is up 2.3% for the day, which, it is an ETF. A 2.3% move is a bigger than normal move for this particular ETF. Looking at the charts, and my kind of gut feel here is I do think within the next 20 days or so, IWM will more likely fall than continue to go up. So what we're going to do, we are going to do a skewed strangle, which is slightly bearish. If we look at this from a logical standpoint, if we look at it from where we're going to put the put, so where are we going to sell the put leg? Now, I traditionally open a delta neutral strangle at the 20 delta. And if I have an assumption that IWM is going to fall, I'm going to pick a lower delta, i.e. move my strike further away than the current price. So I'm going to go, and if you look at the delta column here on the right-hand side on the puts, I'm going to pick the 15 delta. So we've got the 15.7 and the 14.2. I'm just going to pick the 15.7, which is the 171, and sell that put. Now, if I wanted to go delta neutral, on the call side, I would pick the 15 delta. But because I think IWM is going to go down, I'm going to pick a delta or a strike that is closer to the money, so a higher delta position. So for this one, I'm going to go for a 20 delta strangle. We got a 20.8 at the one from 195. So I'm going to select the 195 strike, which is a 20-ish delta, and then a put strike, which is at the 15.716 delta. So you can see here that my credits will be $2.58. And because I'll be doing one contract, that's $258 that I'm probably going to look to get filled out. The mid price is sitting at $260. I now have a bit of direction when it comes to strangles. A lot of people come to me and say for short strangles is, oh, what if, it breaks through my call strike or my put strike? So again, there are ways to manage these strangles, which I've got a number of videos on my channel. And I always talk about if you've got a directional bias in the market, you can still put on strangles, but just skew them to your directional bias. And it's really as simple as that. And again, the reason why I like to do short strangles is you use the same amount of buying power for selling both legs, and you make more money or more premium. And therefore your return on capital is more efficient and is higher by doing. So let's see where I get filled at. So I got filled at $2.59, which is a bit lower than the 262 that we were just talking about. So I had to play around with the mid price. And again, I didn't want to take a long time on this video just to show you what we got filled. So just to confirm what we've done here, we have sold the out the money put at 171 and sold the out the money call at 195. And my total combined deltas, if we take 15 and 20, is 5 deltas. So I now have directional risk to the upside in this position because I want IWM to fall by around 5 shares. So that's basically what we do. We've added a bit more directional risk to this position because I feel IWM has had a strong up move and we want IWM to fall. So I really hope you've got some value from this video. Again, click the first link in the description if you want to speak to me, if you want to have one-to-one coaching so you can understand more about my methodical approach on how I trade options and how to, become a profitable trader in options quicker and also consistent.